Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive free cash flow that covers the dividend. I prefer 75% payout or less. Companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in the stocks within the portfolio on a weekly basis, every 2 weeks at a minimum whenever I get paid, but I also do large purchases if I get a bonus or do a side job or something along those lines. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. There is nothing to pay for. We all have enough to pay for, so it is completely free to see what I'm doing. Every Sunday I put out a portfolio update. You'll see all my buys, all my sells, all the activity in the portfolio, any dividends paid out, and every holding and how many shares of that stock that I own as well. If you would like to help me out, there is a Webull link down below. If you use that link, set up a Webull account, deposit some money into that account, you'll get some free stocks. I'll get some free stocks. You can open your brokerage account with them. It is a way to help out the channel. Another way to help out the channel, hit that thumbs up, or like button down below, hit the notification bell, and most importantly, subscribe to the channel. So let's jump into the portfolio here. We are going to look at 3 stocks to buy in March. Potentially Pfizer, CVS, and Johnson & Johnson. As you can see, I am seeing some value in the healthcare sector, so that is why I picked these 3. They are also right up against or at their 52-week lows, or in Johnson & Johnson's case, recently set a new 52-week low. And first up is Johnson & Johnson. I actually added to this position this last week, and you are going to see this video on Friday, March 3rd, a couple days into March, but 1 day left in the trading, the first week of the trading month, new month. This year has really flown by. And let's take a look at Johnson & Johnson, ticker J&J, out of the healthcare sector. Average volume, 52-week range, as low as $151.25. And again, that is a new 52-week low, as high as $186.69. So obviously at 152, and this is as the close of business on Thursday evening, right? The March 2nd, and as high as 186. So definitely close to that 52-week low there. Average volume was 7.6 on Thursday, 8.7. So looks like a lot of selling there. Was down slightly, 0.08%. Market cap of $397.042 billion. Beta of 0.54, so it is less volatile than the overall market. PE, price to earnings ratio, 22.75. This is one I'd like to see pull back further, and as it pulls back, I'm going to continue to dollar cost average down, decrease my cost basis, increase my yield, and increase my potential future returns, right? I don't mind the red in my portfolio. Whenever I see it as a buying opportunity. Earnings per share is $6.70. Our next earnings date is April 18th. Forward dividend yield is $4.52 paid out on the year. They do pay out quarterly. $1.13 quarterly is what they pay out per share. And a nice dividend yield at 2.95. And obviously, if this continues to pull back, this yield will go up, right? They're inversely correlated. As the dividend yield goes, or as the price goes down, the dividend yield goes up. Ex-dividend date, February 17th. So we've missed that one, right? If you were to buy them now, right? The record date was 21st. They pay out on March 7th. So they're about to pay out that next dividend. So you'd want to buy them, anytime after or anytime from now to the next ex-dividend date, and the day before the ex-dividend date is when you really want to buy them. So the next one, what did we see here? Does it show that? No, it just shows February 17th. So you wouldn't get the next dividend, is my point, if you bought them now. And a 1-year target, at least according to Yahoo Finance, where I pulled this information, of $181.75 per share. Some other information on the page here. They say it's overvalued according to Yahoo Finance, right? About 20% is what they're estimating. They also say it's bullish. This is more for traders, right? It means it potentially is going to go up over the short term outlook, probably because it just hit a 52-week low. Usually when a stock hits its 52-week low, or sets a new 52-week low, it does have a short-term bounce. So they're seeing that short-term bounce over the next 2 to 6 weeks. It may jump up, but then long-term, it looks like it may pull back further, right? And that probably has a lot to do with the potential lawsuits that they are facing right now. Now, I do own, full disclosure, I own 68.005 shares. My cost basis is $164.43. I am down 7.29%. So again, this is one I am continually adding to and decreasing my cost basis. As long as it stays below my cost basis, I will continue to nibble on this, 1 or 2 shares here or there. I think it's a good, in my opinion, it's a good time maybe to start a position, and then as it pulls back, continue to add to it. That's why it's on the list. Stock number 2, I do not own a position. I did own CVS late last year, or I did sell out of the position. That had run up significantly around $100, $110 there, and I was buying it back here in the $81 range previously. I think it was actually in the $70 range whenever I first started buying. But again, another healthcare stock I'm starting to see value in here. 52-week range as low as $81.36, right up against the 52-week low, as high as $109.69. Again, I sold this last year a little over $100 per share, right? Average volume 8.2 million. Today was 10 million. Again, a lot of selling, down 1.26% at the close of business on Thursday. Market cap of 104.565 billion. Beta of 0.65. PE ratio is a little elevated in my opinion, 25.93. Earnings per share is $3.14. Next earning date sometime between May 2nd and May 8th. Forward dividend is $2.42. Excuse me, with a 2.9% dividend yield. Nice dividend yield. Again, they pay out quarterly, 60 cents and a fraction of a penny there. Payout ratio 69.69%. That's about similar to what Johnson & Johnson was on the previous page. Johnson & Johnson was a 6% dividend growth. This one has a 10% dividend growth, so very nice dividend growth there. Next, the ex-dividend date was previous January 19th. They paid out on February 1st, right? So they've already paid out that last dividend. So again, if you bought them now, you'd be in line for the next dividend. And a one-year target estimate of $113.52. Now, they say this is 1% overvalued here, right? It's near fair value right now, right? I would agree with that, but they also say it's potentially bearish. So this may continue to pull back. Maybe like Johnson & Johnson, we see this set a new 52-week low here in the next week or so, right? So this might drop down below this $81. Again, if this was to drop in the low 70 range, I would definitely be interested in adding this one again. That would decrease this PE ratio, increase the dividend yield, and that's what I'm looking for. Anything over 3% is very nice dividend yield in my opinion. Next one, last one on the list is Pfizer. Again, a lot of healthcare stocks covered this week. I'm not going to be buying them all. Johnson & Johnson for sure I will, to decrease my cost basis, but these are two that I am definitely watching. And again, near fair value. They have a 52-week range as low as $39.81, right up against that 52-week low, as high as $56.32. Average volume of 22.5. Today it was 19 million. They were actually up 1%. Market cap of $228.247 billion. A beta of 0.58, so less volatile than the overall stock market, about half the volatility here. PE ratio is low, very low here, the lowest of the three, 7.43 on the price to earnings. Earnings per share, EPS is $5.47 per share. Very nice there. Next earnings date is between May 1st and May 5th. Forward dividend is 1.64%. Dividend yield is over 4%, 4.04%. Very, very nice dividend yield. And it has a not aggressive growth here, 2.55%, 41 cents per share dividend payout. It only is paying out 28.6%, right, of its free cash flow towards the dividend. Very nice quarterly payer. So Pfizer is looking very, very attractive. Of the three, to be honest with you, Pfizer may look the most attractive here. Ex-dividend date was January 26th. Like I said, it's paying out March 3rd. Actually, when you see this video, it will have paid out the dividend on March 3rd. And they say near fair value, it's actually 1% below what they call fair value here. Same thing, bearish pattern. So they potentially see over the short term, mid-term, and long term, 2 to 6 weeks is what they're calling short term. 6 to 9 weeks is what they're calling mid-term, and 9 months plus is long term. So they are seeing a further pullback. Same with Pfizer. I had bought this last year, or maybe it was the year before last now, and sold out of it late last year. I bought it in the mid 30s. I think it was around $34, $35 per share, and I sold it whenever it hit about 48 or 49, right in there. Right, I think it did hit yeah, it was in the 50s at one point. I don't think I sold it in the 50s. I think I sold it right in the right before it hit 50, maybe 49 per share. All right. Those are the 3 stocks that I am watching for the month of March. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join me on this journey to financial freedom. Hopefully, you're on your own journey as well. Like I said, there is a Webull link down there. If you use that link to sign up for a Webull account, your brokerage account there, deposit some money into there. You'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. Also, dropping a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. Go ahead and drop them all down below. Constructive criticism is welcome as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. Hope you have a great weekend. Don't forget, tomorrow, Saturday, you'll be seeing this on Friday morning. I am recording it Thursday evening. So Saturday morning, I will put out the dividends paid out for February video, and then Sunday morning at 7:30, you will see my portfolio update. So again, hit that notification bell down below. Go ahead and tap on that notification bell and the subscribe button, and subscribe to the channel so you don't miss out on those videos. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.